Jigar Shah from Kimeng Securities. Jigar, hi, afternoon. Was the market at all expecting what the RBI governor had to deliver today?
Oh, well, I think, the central bank governors are now in the habit of surprising. First it was the Fed and then it was the turn of Mr. Rajan today. So clearly I think, I would also agree with the fact that, this had to mark some sort of an end to the rally that we saw, after the Fed's decision. And probably, over the next few weeks as we see weaker earnings data, weaker macro data, etc., the market would again, come down to a more realistic levels of 5,500 to 5,800 kind of range. And I think it will again become more of a, trading market with very few sectors and stocks holding out and, more likely the defensive ones again taking the lead in, remaining in positive.
Jigar, from a macro point of view, do you think the situation is still pretty precarious? Because on one hand, here we have the central bank clearly indicating that inflationary pressures are still very much there in the system. And the other hand, there's no chance of a growth revival anytime soon, especially now with the interest rate trajectory also firmly on the other side.
Well, I think, to first suggest that, economy has to come out, of any kind of downturn, there has to be a very strong sentiment. And I think that will be the thing that will lead to a positive scenario, even if the interest rates are slightly higher. But that itself is not happening, and I think, it's a vicious circle, and, probably that can only get over once, we have the elections. So I mean, I don't think that, we will come out of this 4-5% growth rate kind of scenario, at least until next financial year.
Jigar, so how does one look to approach the banking pack now? We've seen how volatile a ride it has been. Do you think it's now, or rather the recovery in banks has now only been pushed back?
I think, couple of factors will stand out, whether it's a bank or an NBFC. The first thing will be the asset quality, because there are too many pressures on asset quality at this point of time, because of slowing of the economy and, because of various sectors getting into trouble. The second is the capitalization levels of a particular bank or NBFC, and if they are comfortable and if they are well placed with a strong equity base and good borrowing and rating even in this type of the market, then I think those companies will stand out. And once again, there is no prize for guessing those in terms of companies like I would say HDFC Bank will lead that, IndusInd Bank, then Bajaj Finance, LIC Housing, Mahindra Finance. I think these are well-managed companies with good control over asset quality and also well capitalized. So I think those are some names. I'm sure there are some other names, but those will stand out while the overall sector will continue to suffer. It is the Bank Nifty which has made difference while it recovered, and it will also make the difference when it goes down. I think that's going to be the major mover of the market up or down.
What about other rate sensitives, Jigar, especially sectors like auto that have been clamoring for a rate cut, and now they've been hit with a rate hike and the possibility of more rate hikes as well? That's something that you can't rule out as well. How does one position themselves as far as the auto sector is concerned?
Well, unfortunately there is no direct correlation here, although we would like it to be. But look at, in case of two-wheelers, Bajaj, which is one of the major one and has the highest profit in the sector, gets 35% of the earnings from exports. Then you look at Maruti, that is major beneficiary of the yen depreciation versus the dollar. So as the rupee weakens, I think Maruti also continues to do well, at least on the profit front, even though the volumes are not so good. Then look at Tata Motors. Everything is coming from outside India, and at least on a translation it looks very good, the numbers, and their outside India performance is very good. So that leaves you with relatively smaller companies, with one exception being Mahindra, which is also doing reasonably well because tractors are doing well. So I would say that auto industry per se can withstand another 6 months of slowdown. After that it will get really worse if the things don't revive next year. But as of now I'm not really negative either on the earnings or on the valuations of these stocks, and I still maintain buy on most of these stocks.